Hello, namaste everyone. This is Rupi Raja and today I will do the NFO review for Nippon India Nifty 500 Low Volatility 50 Index Fund. Talking about this fund, the launch date is 16th April 2025 and the end date is 30 April 2025. The allotment date is 7th May 2025 and there is no exit load if you redeem or switch your funds. The scheme performance is measured against the Nifty 500 Low Volatility 50 Total Return Index. Talking about what is a NFO, NFO is the first time an investment firm offers a new mutual fund to the investors. It is just like an IPO, that is initial public offering, but it is for mutual funds. The purpose of a NFO is to raise capital for the fund and attract new investors. Talking about what are mutual funds, a mutual fund is a financial vehicle that pools money from many investors to invest in a diversified portfolio of securities such as stocks, bonds, and other assets. Investors buy units, that is net asset value units, in the mutual fund, becoming partial owners of all its holdings, and a professional fund manager manages the portfolio on your behalf and they charge an expense ratio for it. Talking about this fund, the fund manager is Jitendra Tolani. The past performance of the fund manager, that is Jitendra Tulani, is good, and even the fund house, that is Nippon India, their core strength lies in that they had pioneered passive index funds in India and they were the first to bring a lot of index funds. So I believe that yes, this is a very experienced management team and the index funds that they bring are also very good. Talking about 10-year CAGR of this fund, the fund here is low volatility 50 index. So talking about the 10-year CAGR for this low volatility index, it has been just 14.6% versus 13.1% of Nifty 500. So return wise, this index fund does not seem very good, as in they do not promise high returns. So first point of high returns is not being completed here. Talking about how this methodology or how the companies are incorporated in this low volatility score, the top 50 companies based on low volatility score are calculated using the 1 year daily trailing prices. And currently if you see the percentage distribution of all the stocks, the large cap consists of 75% of this fund, that is 25 stocks. The mid cap consists of 24% of the portfolio, which consists of 19 stocks, and the small cap consists of 2%, which includes 6 stocks. So talking about Nifty 500 Low Volatility 50 Total Return Index, this index fund is diversified across 11 sectors and consists of sector rotation. So yes, based on the volatile scores for all the stocks, it will continue to shift between the stocks. The Nifty 500 Low Volatility 50 Index tends to perform relatively better with low volatility compared to Nifty 500 Total Return Index during high periods of drawdown, and has proved to be an anomaly to the theory of high risk equals to high returns. That is, this fund has been low in volatility but they have given higher returns. So talking about the asset allocations, the fund house will allocate 95 to 100% in equity and equity related securities of this index fund, and it will allocate 0 to 5% in debt and money market instruments to manage liquidity and redemptions by the fund holders. Talking about the tax implications, the short term capital gains STCG says that if units are sold within 1 year, the gains are taxed at 20.8%, including surcharge. Talking about the long term capital gains, that is LTCG, for holdings exceeding 1 year, gains are taxed at 12.5% after a redemption of 1.25 lakh per financial year. If you go for IDCW option, dividends, if chosen, are taxed as per the investor's income tax slab with tax deducted at source applicable on payouts exceeding 5,000 annually. So this IDCW stands for income distribution cum capital withdrawal, and it refers to a mutual fund option wherein a portion of the fund's profits including dividends and capital gains is distributed to investors and regular investors. Personally, I am not a big fan of this option, and I would also suggest the viewers also to choose a good mutual fund advisor who can guide you as to which option you should choose while investing in a mutual fund. Personally, I prefer to go for a direct plan and growth option of a mutual fund. Talking about my opinion on this NFO, I will go for large cap actively managed mutual funds or flexi cap funds instead of a passive index fund like this low volatility index fund, because the duration of rebalance is in this fund is very long at 6%, and I prefer someone who is active in management, and if there is some bad share he can quickly sell that share. Since I am young, I will take more risk and invest in a stable core outperformer mutual fund like a Parag Parikh flexi cap fund rather than a standalone bet on this index fund. Talking about suitability for different investor type, if you are a conservative investor, go for large cap funds. If you are a balanced investor, you can give it a skip. If you are an aggressive investor, you can give it a skip. If you are a goal oriented investor, you can give it a skip. If you are a passive investor, then also you can give it a skip. If you are an active investor, and even if you are a young investor, you should give it a skip and go for active stocks. If you are diversified investors, if you have allocated good percentage to gold, large cap, mid cap and small cap, you can give it a skip. If you are speculative investors short term, then also you can give it a skip. Personally, I have given a skip for all the investors because personally I did not like the return of this index fund, which was very low compared to the 500 total return index. You can easily go for any active mutual fund and you can easily gain much more return than this. So the scheme details of this document are given in the link, and I will also attach this link in the description box. Conclusion: that's the wrap on today's NFO deep dive. We have crunched the numbers, dissected the story, and now it's your turn. What do you think? Drop your thoughts down below, hit the subscribe button, and let's keep decoding the market together. If you have any doubts or any issues, please write down your comment in the comment section and I will definitely give justice. Thank you. This is Rupi Raja.